Just a few housekeeping notes before we do. This webinar is being recorded and it will be shared on our YouTube page, I believe, and as well with any borrowers who attend or registered for the webinar afterwards. We encourage you to ask any and all questions that you have throughout the session. And you can do so via the Q&A, either at the top or bottom of your screen, or as well in the chat. All right. So we want this to feel as interactive and helpful and valuable as possible. There's a lot of sort of news and updates that we want to make sure we share with everyone in the Savi community. So we're going to go ahead and get started. If we can move to our next screen. Great. So for those of you who might be new to Savi, and for those of you who are returning, welcome back. We just wanted to take a quick moment to sort of brief everyone on who we are, what we do, why we do what we do, and why we've been a trusted resource for so many borrowers for so long. So Savi is a social impact tech startup based in Washington, D.C. We were founded by policy experts and advocates back in 2017. That was the year that borrowers first attempted to apply for public service loan forgiveness and were sort of en masse rejected from the program. And our founders, who had been working on the policy side of things, saw what was happening and decided to actually do something about it. And so they developed Savi, a technology platform, to better assist borrowers in not only understanding and managing their student debt, but to actually cross the finish line around programs like public service loan forgiveness. We had seen all of these technicalities and administrative issues that were preventing borrowers from crossing that finish line. And ultimately, our goal through the Savi tool and services is to be able to help you become financially free from that student debt. And that starts with attending a webinar like this today, better understanding what's going on, what your options are, and how to utilize our platform to the best of your ability. So with that being said, we will dig into the good stuff on this next slide. And some of you who might have been following the news or watching what's going on, some of this might come as news to you, but we're going to recapture that sort of all here. So if we can go to the next slide. Thank you, Ian. And just to take a quick pause here, I am joined by some of my wonderful colleagues on the call today, some of whom you might already be familiar with, some of our previous webinars. Ian, Coon, Kayla, and Ellis all are tremendous and valuable resources around these programs and student debt, and we'll be helping to answer your questions in the chat. So we've got the full team enlisted to support our efforts today. All right, so let's talk about what's been going on, what's coming, and really what you should know as a student loan borrower right now. So there was some breaking news this morning. It got leaked yesterday, but it became official this morning that the Department of Education and White House have announced an extension to the payment pause. So originally, this was the payment pause that went into effect back in March of 2020 under the CARES Act. Payments were paused and interest was waived on the majority of federal student loans out there. That has since been extended several times. And as of this morning, it has now been extended through August 31st, 2022. So big headline here, the payment pause has been extended through August 31st of this year, which means after a little over 2 years with payments on pause, they will be resuming or are scheduled to resume in September of 2022 this year, okay? Now, whether or not that will be extended again, we haven't been given any confirmation or insights yet, but we will keep you posted. Many of you registered from this webinar for this webinar from an email you received in your inbox just hours after that announcement was made. So one of the things we really take pride in is being able to alert our borrowers in our community about these significant movements and changes in the policy landscape. So again, just a headline, that payment pause has been extended through August 31st, 2022. Now, just as a reminder, those eligible loans for this payment pause are only federally held student loans, meaning they are owned by the Department of Education. So if you have private loans or if you have commercially held older FFEL loans, okay, those are likely not, well, they're not likely, they are not eligible for the payment pause. And you usually have to continue making payments on those loans. And you likely have had to do that since the payment pause began. All right. Now, what presents itself as a great opportunity for borrowers who are potentially eligible for public service loan forgiveness is that for each month that payments have been paused from March of 2020 through August 31st of 2022, okay, about 30 months in total, for each one of those months that payments have been paused, you are eligible to receive basically a free PSLF credit, okay, towards the 120 you need for full forgiveness. And you're able to do that without making a payment at all. I've spoken to many, many borrowers who have been confused about this and have actually continued to make payments during this time, even though their loans have been paused, because they thought they needed to in order to continue their eligibility for the PSLF program. You do not. In fact, you should be taking advantage of this payment pause, not making a payment. And you are able to basically claim, if you've been working full-time for a qualifying employer during this period, again, a PSLF credit for each one of those months, 1 credit per 1 month, so 30 in total as of the end of August. This is huge. You just need 120 total in order to achieve full forgiveness on your loans. And you've essentially been able to recoup 30 from the past 2.5 years of payment pause. Again, without having to have made a payment, you are going to be significantly closer to achieving full forgiveness on that loan, if not already past the 120. So this is something that is absolutely significant, and we want to make sure borrowers are aware of. Another thing that's been going on, and this might have already impacted you as a borrower, but there's been some major transitions amongst the federal servicers. So I'll step back here and just give a little context to what a servicer is and how it interacts with you as a borrower. So federal servicers are companies like Navient, Nelnet, Great Lakes, FedLoan, Mohila, Ed Financial, et cetera. All of these are companies, there are about 10 to 11 total, contracted by the Department of Education to manage and it's sort of the repayment of your loan. So that's where you log into your account, set up your auto debit, right, and make those payments and things like that. And so there's been some major announcements around servicer transitions. Navient, Granite State, and FedLoan, 3 of the biggest federal servicers, in the past 8 months or so have essentially announced that they are not going to renew their federal contracts. They're getting out of the federal student loan servicing game. And so what that means is for the about 16 million or so student loan borrowers who are currently serviced by those servicers, their loans will transfer to other servicers. So if you have a federal loan with Navient, it will be transferred to Advantage. Granite State is going to Ed Financial, and FedLoan, if you are pursuing the public service loan forgiveness program, you will stay for now and through 2022, but likely will move after that. And it could be to a variety of servicers, but we do know that the PSLF program is being overtaken by Mohila. Just to give some context here, the PSLF program was solely managed by FedLoan Servicing. So if you had submitted ever in the past, an application or pursuing the program and tracking towards it, your loans would have moved to FedLoan during that time. All right. Now, a couple pieces of advice for borrowers, and this is just sort of good, I would say, borrower hygiene in general. First and foremost, you want to make sure that your contact information is fully updated with your servicer. That way they can communicate with you about any of these changes, and you can receive those updates accordingly. Second, and I would do this regardless of whether you're trying to pursue public service loan forgiveness or not, is that you should download a copy of your payment history from your current servicer account. It's just good to have on file and in record for sort of your own posterity. But one of the key pain points for the public service loan forgiveness program, and for so many borrowers, I'm sure many of you in attendance today, has been the fact that many times their payment history has not been counted accurately towards their sort of qualifying payments towards this 120. And so having a record from your current servicer before it transitions, and if it's already transitioned, that's okay. But it's just good if you can download a copy of either your statements or your payment history. You can usually do this through your current servicer account, just so you can have record of that, because once your loan does transfer, you won't be able to access your previous servicer account. All right. So again, it's just good to sort of have this on file. Okay, last but not least, the PSLF limited waiver. And we're going to talk in more detail about this on the coming slides because it's a sort of a big overwhelming thing, and we want to make sure that we break it down as best as we can for borrowers. But essentially last October, October 2021, the Department of Education came out with a big announcement around the Public Service Loan Forgiveness Program, essentially expanding the eligibility requirements needed from borrowers. And they introduced what they call the limited waiver. Now, this waiver does not refer to a physical thing. It refers more to a period of time during which borrowers are able to essentially take advantage of this expanded eligibility retroactively. So many borrowers who were previously rejected or denied or were not able to qualify for the program are now going to be eligible and are going to be able to retroactively sort of recoup that eligibility from last October through this coming October 31st, 2022. That is the deadline for the waiver, okay? It doesn't mean you need to have reached the 120 by October 31st, 2022. In fact, most of you, probably won't, because you'll be somewhere, you're somewhere in the 10 years and working towards your 10 years. It just means that you need to take certain action in order to make sure that your case and scenario has been re-reviewed and that you are recouping the maximum amount of potential eligible credits that you can now gain under this expanded eligibility. And I would say, regardless of where you are in the PSLF process, what that means is that you are going to want to submit a form. And the good news for the PSLF program is that there is one form and one form only when it comes to trying to achieve forgiveness under public service loan forgiveness. And it's called the employment certification form. And you could need to submit multiple because you might have multiple employers that qualified. And we're going to talk about that in a second. But there's one form only. And I would say to everyone in attendance on this webinar who thinks that they might be eligible, might have been told information, might have been rejected at one point, my advice would be, just broadly, if you can leave today with one thing, don't self-select here, all right? The best way to ensure that your situation is going to get re-reviewed is by submitting that form. We're going to talk in more detail on that in a second. Okay, the last thing that I just wanted to mention as well before we move on is part of the announcement today included mention of what they're calling the Fresh Start program. And this is basically lifting borrowers who were previously delinquent or in default into good standing by the time payments resume. We know little to no information, outside of what was included in the announcement, which was sort of a vague, mention and description. But we will be sure to update all of our borrowers when we learn more. And through the Savi process, we're able to identify borrowers who might be in default and can reach out to them proactively, and will be doing so to make sure when this information becomes available that they are able to receive it and take advantage of it. Okay, I'm going to pause there and just see, I'm going to consult my colleagues. Any questions that are coming through that might be helpful to answer out loud before we move on and talk a little bit more about the PSLF waiver?
I don't think so at the moment. They're pretty niche if you want to keep going along.
Okay, great. All right, so we can go to the next slide, Ian. Thank you. Okay. So one of the biggest sort of announcement that, like I said, came about last October, but that has continued to sort of be a huge pain point for borrowers, and there's just sort of a lot involved here. We really want to take the time to be able to review it and go through it with you all, is around this PSLF limited waiver. What is it? How do I take advantage of it? As I just said, I would encourage every borrower to take some type of action around PSLF if they think they might be eligible before October 31st of this year. So in an effort to try to help break down and help you understand exactly what's going on here and what's involved, first, we're going to sort of do an overview or provide a breakdown of the Public Service Loan Forgiveness Program in its original form. What were the original requirements and what that resulted in, and then sort of help you understand exactly what this waiver means and how those requirements expanded and what that can mean for you. All right. So as far as public service loan forgiveness goes, and when we say before, again, that is before this PSLF waiver went into effect. So this is the original program. So public service loan forgiveness, or PSLF, is essentially full forgiveness on the remainder of your loan balance, whatever that may be. It could be $5,000, it could be $500,000, tax-free, okay, doesn't matter, after you have made 120 qualifying payments. Now, I say qualifying payments in air quotes here because the devil's really in the details as far as what constitutes a qualifying payment. And it really comes down to three things, as you can see on your screen here. But before I sort of go into those, I want to say a few things about the 120 payments. First of all, they do not need to be consecutive. They just need to be cumulative. I'm going to repeat that. They don't need to be consecutive. They just need to be cumulative. So you just need to reach 120 total payments. Okay, you don't need to make them in a row. The other thing about these 120 is you can only receive one qualifying payment credit per 1 month per one payment, meaning you can't double up on payments in a month and receive 2 credits. In any given calendar year of 12 months, you can only receive a maximum of 12 credits, meaning the earliest you could achieve forgiveness under this program, if you need to get to 120, is 10 years. And that's if you were making 10 consecutive years of payments, right? So again, they don't need to be consecutive, but that is the earliest it takes to achieve PSLF. So you can't do it in 5 years. It's got to be 10 years. Now, what constitutes a qualifying payment? Well, it is 3 things, and you need to achieve these things simultaneously. Number 1, you need to work for a qualifying employer. So that is any government organization at any level, federal, state, local, or tribal, or any non-for-profit 501c3. The reason why we're focusing on public service loan forgiveness for this webinar is that the majority of our borrowers in our community at this point are PSLF eligible. For borrowers that might not be, and we're going to talk about this a little bit later on, the Savi tool can help you identify your best repayment options for when payments resume. So even though we're focusing on PSLF now, the Savi tool is still able to help those out there. I saw a few comments coming through the chat, so just wanted to address that. All right, so back to qualifying employer. So this is pretty straightforward. And for those of you who have used your Savi account or who might be new to the platform, my colleague Ian is going to show you later on exactly how you can actually add your current and any previous employers to see and verify that they are eligible and go from there. The only stipulation around your employment is that you must work a minimum of 30 hours or week more, 30 hours or more a week, apologies. All right. Now, let's say you work part-time at one hospital that is a qualifying employer and part-time at another hospital that is also a qualifying employer. So long as both employers are qualifying, and so long as you work a minimum of 30 hours or more a week, you can also qualify for the program. So you don't just need to have one form of full-time employment. You can combine part-time employment again, so long as all the employment is from qualifying institutions and you're working 30 hours or more combined a week. All right, so that is qualifying employment. Number 2, qualifying loan type. So under the original rules of the program, in order to be eligible for forgiveness under PSLF, you needed to have a federal direct loan. The direct loan program started in 2010, okay? And so any loans from 2010 to present, there's a very good chance that they are already direct. However, if you had a loan from before 2010, it's likely it could have been a part of the FFEL loan program, FFEL, which stands for Federal Family Education Loans. This was simply the loan program in existence prior to direct loans, when sort of the Department of Education took over the lending. All right. Now, if you had one of these FFEL loans, or if you had a Parent Plus loan, you would need to consolidate that loan, okay, into a direct loan, consolidation being a free federal process by which you are basically creating a new direct loan. And then after that point of consolidation, you would be eligible to start accumulating qualifying credits towards PSLF, towards that 120 needed. However, no payments or periods of employment prior to that loan becoming a consolidated direct loan would be eligible, okay? And as I'm going to talk about in a second, this is what led to the massive rejections of borrowers from the program when they went to apply. It was because of their loan type. They had no idea that they needed to have a direct loan. And so we're working towards forgiveness for 10 plus years, went to apply starting in 2017, and were told they didn't have a direct loan, that they needed to consolidate that loan and basically start over and work another 120 payments worth, which for any borrowers out there, please, raise your hand. I'm sure you can attest to how absolutely maddening this has been for you. And this happened to many, many people. And was one of the major sort of impetuses, behind this big PSLF limited waiver, which we're going to talk about. But again, I'm explaining sort of the original rules of the program here, right? So keep that in mind. So that's loan type. And number 3, you needed to be repaying that direct loan on a qualifying repayment plan. And the only types of repayment plans that qualified were income-driven repayment plans. There are about 3 to 4 types of income-driven repayment plans. Didn't matter which one, but it needed to be on an income-driven repayment plan and for the on-time and full monthly amount. All right. So you needed to satisfy all 3 of these things: your employment, your loan type, a direct loan, and your repayment plan, paying on an income-driven repayment plan on time for the full monthly amount simultaneously, and make 120 payments with all 3 of these satisfied simultaneously in order to achieve forgiveness. So let's say you were working for a qualifying employer, had direct loans, but weren't making a payment on those loans. That didn't count. Periods of forbearance and deferment outside of this payment pause does count. But periods of deferment or forbearance or in-school deferment, things like that, if you were not in repayment status, those do not count. Okay, you had to be making that payment on that loan. All right. Let's say you had a direct loan, were on an income-driven repayment plan, but not working for a qualifying employment, that wouldn't count, right? So you need all 3 things simultaneously. All right, so what did this result in? If we can go on to this next slide, Ian, please. Okay, so as I had mentioned before, this program, or I'm not sure if I've mentioned this, but I will now, the PSLF program started in October of 2007. All right. So basically, anything from October 2007 to present day is fair game, and it's retroactive. Okay. So if you're just finding out about this now, that's okay. All right. But anything before October 2007 is irrelevant. Well, if you were working as a public employee, public service employee for a decade before that, unfortunately, none of that counts. It's only October 2007 to present. So if it started October 2007, 10 years later, October 2017 was the first time that borrowers were eligible to basically apply for forgiveness, right? This would have been sort of the first wave of borrowers. And over 100,000 people applied, and less than 1% were accepted. And why did this happen? Well, it was these technicalities like their loan type, repayment plan, that basically kept them out of the program and getting forgiveness. They were rejected because they didn't have the right loan type. They were rejected because they were in the wrong repayment plan. And so all of these things essentially prevented borrowers from taking advantage of the promise of the program. Which was that if you work in public service for 10 years or more, you are able to have your loans forgiven. That's it. It's quite that simple. Unfortunately, that's not how things turned out under the sort of original requirements of the program. So that is why, and if we can go on to this next slide, Ian, after a lot of push and work from the advocacy community on this, and the policy community, and Savi was sort of proud to be a supporter and a member of a lot of these efforts. They were able to announce last October a major overhaul to the PSLF program. And it was introduced via what they're calling this PSLF limited waiver. And again, this limited waiver doesn't refer to a physical thing, but a period of time, essentially from last October to this coming October 31st, 2022, during which borrowers are able to retroactively claim credit for potentially eligible months of payment and service during this period of time. So this would have been, periods or payments that they might not have gotten credit for before, that they might have either been rejected, what have you. They are now able to take advantage of expanded eligibility. And I'm going to go through that eligibility sort of in those same three sort of areas, you could say. So first and foremost, let's talk about qualifying employment. Not much has changed here. You still need to work for a government organization at any level or a non-for-profit 501c3. And you still need to work a minimum of 30 hours or more a week. However, what has changed, and this has been incredible for anyone who, is nearing retirement or who maybe has retired recently or in the past couple of years or what have you, you can now be retired, or I should say unemployed, at the time you are applying for forgiveness. So let me give you some context here. On the original rules of the program, when you had reached your 120th qualifying payment and went to sort of submit your final application for PSLF, you needed to remain employed at that institution, at that qualifying institution, at the time of applying and up until and through the time you actually received forgiveness on the loans, which for anyone who's had any experience of this, that processing time with Fed loan could be anywhere between 3, 6, we were seeing upwards of 12 months for borrowers to get their forms processed and forgiven. And these are people who had been banking on trying to retire, et cetera, and it impacted their eligibility. So now you can retroactively, even though you're not currently employed, apply for forgiveness. As long as you've made 120 qualifying payments while you were employed. So I'll give you an example here. Been working with a school teacher out in Los Angeles who retired a couple of years ago with $70,000 in student loan debt. She had applied for public service loan forgiveness back in 2017, was rejected because she wasn't on the right repayment plan and thought she wasn't going to be eligible. And she was basically going to be, carrying this debt for the rest of her life. She's in her early 70s. And now under this waiver, because she had made 120 payments before the time that she retired, she's actually eligible to apply for PSLF. And based on the expanded eligibility I'm about to explain right now, she's eligible to have all of her debt forgiven right now. She will have that $70K forgiven. So this is pretty life-changing stuff. And if you know anyone who has recently left the workforce or who might be in a position to benefit, I highly suggest, and we're going to show you how you can share Savi with them just so that they are aware, because they only have until October of this year to try to take advantage of this and submit the forms that they need to. All right, so that's the qualifying employment. Now let's talk about qualifying loans. So remember how before I had talked about that you could only have direct loans and that if you didn't, you needed to consolidate those loans in order to be eligible, and then you could start, accumulating eligible credits. Well, under this waiver, you can now claim credit for any payment made, regardless of whether it was a direct loan or a FEL loan, regardless of if you consolidate it. That consolidation does not restart your clock at zero. The payments made before that consolidation are now eligible to count. So what you were seeing is borrowers who thought they had to restart and we're only 2 years in are now at the 120 because they're allowed to count the payments made before that consolidation. The only loan type this doesn't apply to is Parent Plus loans. Just a quick raise of hands. How many out there on the call today have Parent Plus loans? I'm just curious. Okay. So just to give everyone some context, Parent Plus loans, many people think the student debt crisis is a young person's problem, a millennial issue, when in fact, the fastest growing demographic of student loan borrowers is actually 50 plus, and that's parents taking out loans for their kids. And that's exactly what a Parent Plus loan is. It's a loan taken out by a parent on behalf of a child, but in the parent's name. And so Parent Plus loans are eligible for public service loan forgiveness based on the parent's employer or employment, I should say. However, they would need to, give us 1 second here. However, they would need to consolidate that loan in order to become eligible, okay? And so after consolidating that loan, you're then able to start accumulating credits, qualifying credits towards that 120 needed. Now, under the PSLF waiver, Parent Plus loans were not included. And by that, I mean, you're not able to recoup prior payments before that consolidation. you have to start over at 0 after that consolidation for Parent Plus loan borrowers out there. I know it's not fair. We're pushing along with a lot of other advocates to have these included going forward. But as of right now, Parent Plus loans, you still need to consolidate, and we'll start basically at 0 from the point of consolidation, and we'll need to work 120 payments worth, in order to be eligible. All right, so we've talked employment, we've talked loan type. So now any payment you made, direct or FEL, doesn't matter, can count. And let's talk repayment plan, last but not least. So you are able to have repaid that loan on any type of repayment plan. It doesn't have to have been income driven. And it even doesn't have to have been for the on-time or full monthly amount. They are sort of vague in their description here, but they are allowing borrowers to count payments that might have been within 15 days late of their payment due date and might not have been for the full amount. Okay. So essentially what this boils down to, and I'll try to sort of put this in the most simplistic terms, because oftentimes, and this isn't, because, you all, need simplistic terms, but more so because this program is so confusing that it often creates more questions than answers. And I understand that better than anyone. So to try to recap what this means, basically, if you look at October 2007 to present day, okay, that's sort of your eligible time frame here, all right, of employment. If you were employed at a qualifying entity for any period of time during that period, okay, October 2007 to present day, and you made a payment on your loan, okay, regardless of if you had a direct loan or FEL loan and it was consolidated or not, okay, that can count as a qualifying payment. Doesn't matter what repayment plan you were on. If you made a payment for that month, you're now able to recoup that as a qualifying payment. All right. So what does this result in for borrowers? Well, on this next slide, if we can go to that one, Ian, please, we're going to show you. So again, this was announced back in October of last year, all right, and extends through October 31st of this year. And the results have been pretty life-changing for many, many people who, for lack of a better term here, had been screwed over by this process. They go as follows. So there was a first wave of borrowers, about 22,000 public service workers, who received automatic forgiveness because they were already tracking towards the program. FedLoan was able to basically calculate, well, based on this expanded eligibility, they are now eligible to receive X many more credits that put them over the 120, and they receive forgiveness automatically to their account. And for anyone who ends up, because of this expanded eligibility, let's say when it comes down to it, you've made 140 eligible, qualifying credits, right? So more than the 120, you are eligible to be refunded for that difference. So we've had several borrowers come through Savi who not only have their $100,000 plus student loan debt been zeroed out, but they actually received over $10,000 direct deposit into their account a few weeks later in a refund because of the overpayments made. So this is absolutely huge. So that was sort of the first wave. That's automatic. And that's people who already had FedLoan and had already submitted forms around this. Okay. Then there was about 27,000 or so workers who just needed to certify an additional period of employment in order to get forgiveness. And that averages over about $100,000 per borrower of that sort of band. So they just needed to submit one additional employment certification form to push them over the edge of 120. And then there were about 500,000 workers. And basically what the Department of Ed has been able to calculate is that these borrowers are going to, on average, receive about 2 additional years because of this waiver, 2 additional years of PSLF credits. And these are borrowers who, again, had already submitted that employment certification form at some point, had FedLoan, and so those are able to be applied automatically. So all of these sort of first 3 bullets were automatic. However, and this is sort of the most important point I can make to you all today, there is a vast and the majority of potential eligible borrowers out there, and this could be you, who, if you've never submitted a form for the PSLF program before, if you've maybe been rejected, okay, who are eligible, you could be eligible for full forgiveness right now and sitting on it, but just not know it. who are eligible to perhaps have their loans fully forgiven now, or to be a heck of a lot closer to full forgiveness than they ever thought they were before, okay? But they simply haven't submitted the forms yet. And that's why we are here today with you, to basically emphasize how important it is to take that action before October 31st of this year in order to take advantage of this PSLF waiver. All right. So this is, I would say that my one best advice again is don't self-select here. There's been so much misinformation, whether you were rejected or told you weren't eligible or told this by a servicer, et cetera. This is why the servicers are getting sued left and right. This is why this big overhaul happened, because there were just so many pain points and things wrong with the program. And so if you have any inkling or thought that you might be eligible or interested in having your eligibility re-reviewed, even if you've already been rejected within the past year, if you submitted this before October of last year, you are going to want to submit these again. Okay, that is the only way that they can re-review your case and your eligibility can be sort of reviewed under these new and expanded eligibility requirements. All right, so it's very clear. Like I said, there's one form and one form only for this program, and it's the employment certification form. It gets signed off by you, the borrower, and then it gets signed off by your employer. And if you have multiple previous employers, then you're going to need multiple of those forms signed for any of those periods of employment. And those all get submitted to Fed Loan Servicing. And this all needs to happen before October 31st of this year. Okay, I am going to take a pause and switch gears here and turn it over to my colleagues, Ian, who's going to walk you through sort of how Savi can now help you with all of this. But first, maybe I'll see if there are any questions that might be helpful to answer out loud before I turn the reins over to you, Ian.
We're getting a lot of questions on kind of the timeline of it, knowing it's April, this is up in, the end of October. How long are we seeing times, with Fed Loan,
Yeah, that's a great question. So unfortunately, there's obviously been a surge in volume that Fed Loan has experienced since this was announced. This was announced last year. I would say that this is the latest that I was told from Fed Loan itself this past week. They're seeing wait times of upwards of 3 months to process these forms. So as long as you get it in before October 31st, you are okay. But the sooner the better here. Especially if this is your first time submitting anything and you're having to basically certify, upwards of 10 years or more of employment history and payments, that's going to take even longer. The longer you've got to sort of certify for, the longer it's going to take. And so, I would encourage borrowers to take that action as soon as possible.
Great. Thanks for shedding some light on that timeline.
Yep.
All right. Well, like Lindsay said, everything she talked about is, really great detail, behind the scenes, how all the puzzle pieces come together, how all the forms work, what we need to apply for, what it means, what the new policy changes all are about. The Savi tool brings all of those puzzle pieces and information together for you. So answering a couple of simple questions, it is able to guide you through the process and make a best recommendation of what plans are working for you. So it will say, if you need to consolidate a loan, if you should apply for this plan because it will make you pay, the least amount of money in the least amount of time. If you're eligible for forgiveness based on your employment, all of that information and, pretty granular details, it's able to answer online for you. At that point, you are able to choose to file that application and paperwork that's necessary once a year to certify your employment and your income, like Lindsay had referenced with Savi. For many folks, there's a small fee to be able to do that. Or there is also a free option that guides you through downloading them and doing them on your own. You also, as I believe Lindsay mentioned earlier, are enrolled in just loan monitoring in general. So anything that happens that's relative to your student loans. So big policy changes like this waiver coming out, if it's extended, if the payments are paused again, if there's loans canceled, if the school that you went to is closed and we have that information, anything like that, we will email and let you know. So, similarly to people that are always watching your credit score, making sure your identity isn't stolen, we'll be able to help notify you about changes that are applicable uniquely for you in your student loans. The other, last great feature here that is also that upgraded feature for that small annual cost, usually about $60 a year, is being able to receive personalized support from experts. You'll be able to schedule phone calls, answer one-on-one questions and emails with them, similarly to, the webinar that we've been chatting with here with folks as well. So if you don't have your Savi account yet, everyone on this workshop should have gotten an email in their inbox within the past hour. I sent them all personally, so you should have it in your inbox, welcoming you to make your account and log in. I would definitely check your email inbox, check your spam, check your junk. It comes from Team Savi, that is no reply at bysavi.com. If you don't happen to have that email, Kayla and Ellis can help you in the chat find the right place to log in. If you're a returning Savi user that's had an account already, feel free just to log into your account like you always have. That is just app.bysavi.com/account/login. And that will get you to your student loan dashboard, however you get logged in and set up. The student loan dashboard, if you're not familiar, is what we like to call Student Loan Central. So everything that you would need to know about your student loans can be found here. We can see all sorts of information, like where your application is in the process. So doing that digitally with Savi lets you know if we're waiting on your employers, if we're waiting on Fed loan, if we're waiting for you to sign something. It will always let you know where that application is. This is helpful, as we said, since things are kind of backed up all across the board right now with this moment in time with forgiveness. So this is helpful for you to always know where your application stands at that point in time. You're also able to see PSLF credits adding up towards 120. When we have payments resume, whenever that is, it'll show you your next due dates. And you can add multiple servicers, federal, private loans all together here to see them all in one spot to see that total balance of your loans. Another great resource available on the tool is this announcements feature. So anything, like I said, of that news and updates that's applicable to you, it will be right here. You're also able that way to sign up for upcoming webinars on the schedule, just like the one that we're all on today. And last but not least here of the cool features, you can invite friends and family, and we will give you a 50% off discount code. We'll email that to you right away. There's no need to wait or for them to accept that invite. This gives you 50% off that upgraded plan. So doing it all digitally, having access to support, having access to hop on the phone, that is what this gets you 50% off of. And then this is where you would just copy and paste that coupon code in to select your Savi plan and upgrade at that discounted rate. But otherwise, we're going to go ahead and hit continue application. There's a big start button. This dives into kind of, the meat and potatoes of the website. It is the online questionnaire. This might look similar to, say, tax software that has a couple questions you answer, and then it at the end gives you your recommendations. So everything in here is designed to save you money every single month and make sure that you're eligible for forgiveness. Some of these questions might feel weird as connected to student loans, but for example, how many dependents you have, this question here is $50 less per month on an income-driven repayment plan for every child dependent that you have. So there are little things that we can tick out through the whole process that show you, how to save money on that. We're already, 33% of the way done through the whole process here after just putting in, 5 answers to questions. So you can see the next one is income. There's no need to, go digging for paperwork. It's just a close estimate. I don't believe it will even let you put a bullet point if you want to, just getting as close as possible there. And this step is very important. There's two important steps. This is the first one, is employment. So like Lindsay was saying earlier about self-selecting and not self-selecting, I would recommend you put every employer in since 2007, because you might be surprised at who is eligible and who isn't. Sometimes schools will say they're a private school, but they're really on the books, a nonprofit organization that would be eligible, and vice versa. You might think, I'm working in the medical field, but that medical office is actually a private practice, a limited liability company or something like that, versus a nonprofit. So definitely good to always check that. We have over 1.7 million eligible employers in our database, so you should be able to find what is applicable to you of where you work, putting in your current employer, and like I said, any past ones until 2007. This is also helpful because then when you go for public service loan forgiveness and have us help doing that digitally, this is how we'll know who to reach out to and who to get signatures from on any former paperwork that is necessary. You can see in this example, we put that we worked at a public school district, for over 10 years. That noted then that we might be immediately eligible for forgiveness, which is really exciting. Even if you aren't, immediately eligible, it will still tell you and say, eligibility detected. Let's keep going to make sure we're on the right track. So it really meets you where you're at on the process. The last big step here is syncing your loans. So we talked about servicers earlier. This will connect to your servicer's website, Navient, Nelnet, Advantage, AES, FedLoan, Great Lakes, Mohila, Ed Financial, all of those folks. You will use your same password that you use on their website to log in. And what that does is it draws a safe, secure, read-only connection so that Savi can pull in and say, here are the amounts, here are the interest rates, here are the payments historically, so that we know how much progress and where we're starting, right? Because most people are not starting from zero in this forgiveness and student loan process in general. So this helps us pick up where we've left off and be able to make that best recommendation. And you could see here that this is that final screen where it says, based on everything you've told me, you are eligible for forgiveness. In this example, we have 6 years left until repayment. That monthly payment, we got down to $177. That's $217 a month we're saving using an income-driven plan. Over the course of the 6 years and 7 months, that ends up being $12,000 less for a total of $14,000. Adding all the interest involved there, that's about $15,000 in loan forgiveness. So, it's very easy to add up quick. Most Savi users find much, much more loan forgiveness than this, especially if you've been paying for a long time and having that, added up and stacked up there. You can see there's 3 other options. These are likely other income-driven options since there are 4 plans for income-driven repayment plans, but this is the best one. That's the lowest percentage rate and the fastest timeline, but you could click to see others and do that. This is also what it would tell you, you need to consolidate. It would say 10 plus years, consolidate, and it would flag that for you as well to need to do that. And last, but certainly not least, at that point, you are welcome to hit continue, and that's where it would start filling out all the paperwork digitally for you, and you would just sign and submit it. Or on the free version, you would be able just to download and fill it in yourself and mail and fax that in. If you were to need assistance in this process on the essential plan, that paid plan, you're able to contact support, send a message, get on the books, on the calendar to chat with someone. Otherwise, everyone is able to access our help center. There's over 100 articles in there that are, in plain English, able to help digest and understand what, maybe is happening with your student loans as well.